China coming to the table is going to be a major positive for everyone's 401k, and I do see that happening within the next, say, 3 to 6 months.
Good morning, Dale Smothers.
Good morning. How are you, Larry?
Doing well. Good to have you in on this foggy Wednesday morning.
Yeah, it's going to be a beautiful day, though, I think. When the fog burns away, hopefully it's not too nasty outside.
Some nice weather.
So with the market in focus here, I think that I feel the tide's turning in the overall market as a whole. There's been a lot of negativity over the last couple of weeks, and I feel those tides are starting to turn. The undercurrent in the market is likely to get a little more positive. For the next 3 to 6 months, I would expect some turbulence still, a lot of uncertainty still there, but we've got some things that could be leading to some positive reactions in your 401ks if you're paying attention to those. Now, namely, I think right off the bat, we've got lowering of energy costs, which is going to help hopefully keep prices down and we won't see inflation rear its ugly head. If that's the case, we do expect the Fed to cut rates a little bit here, and that is going to be a catalyst for market performance, which ultimately means higher 401k prices. Whenever we look at the higher 401k and we're really excited about that, we also have maybe some outlook in the future with tax reform that could come and again cause our 401k to climb a little bit. But like I said, there's going to be turbulence as we start to climb out of this correction, if you will, and we see the rebound. People will start to reevaluate their risk tolerance, which is not a bad idea to see, okay, wait, the market actually can go down because we haven't seen it go down in a while. And now that we know it can, I think you're going to see a lot of people start to say, wait, maybe I should be a little bit more conservative and potentially start selling out of these aggressive positions, which could put pressure on the S&P 500. I do think we finished the S&P 500 a little bit higher at the end of the year, but the year is young and there's a lot of things out there that still have to shake out. China coming to the table is going to be a major positive for everyone's 401k, and I do see that happening within the next, say, 3 to 6 months.
That was my next question. Do you see it happening? Do you think it will?
I do. And so I will challenge our listeners, and I love the listeners of this station. I talk to them every Saturday morning, and I would challenge you, if you haven't ever read The Art of the Deal, go do it. Now, listen, I'm not here to debate politics. That's not my job. My job is to help navigate retirement. Whoever's in office, whatever's going on, we want to help a retiree retire successfully and retire the way they desire. But what's taking place right now is I think Donald Trump's putting something out there that he knows is unattainable, and the market reacted to it very negatively. But when China sees that he wants that far of a negotiation, they're likely to come to the table with something halfway or in the middle, if you will. And ultimately, I think that helps America. I think that benefits America in the long run. The Art of the Deal. Listen to it or read the first couple of chapters, and I think you'll start to see what's going on in America right now is clearly the way that Donald Trump has negotiated since the 80s. Now, whether or not it works, I sure do hope it does, and I believe it will. And if it does, I believe the 401ks will start to look stronger. For a retiree, I'll tell you, Larry, a retiree right now is probably concerned about their 401k.
That's what I was getting ready to segue into, because turbulence equals anxiety. So what does this mean for people's 401k from this point forward?
Absolutely. So turbulence equals anxiety. I love that analogy. And we don't jump out of the airplane when turbulence hits. The 401k is built to withstand some of this. If you've balanced it at all, I think that you've probably seen a little bit of a pullback. I will talk to two different groups of people, really. Whenever we talk about 401k, you've got those people that are ready to retire. They wish they had done something 6 months ago because their 401k was getting as high as it's ever been, and maybe they've seen a pullback and they're hoping to retire within the next year or two. I would tell those people, do not become discouraged, because even inside of your 401k that's probably went down over the last couple of months, you have funds that you can sell. So what I would recommend is move that 401k to an IRA and then get very specific on what funds you sell to raise your income. If you're retiring right now, it's likely that you have some conservative funds inside of your 401k, and those funds have likely not moved much at all. For those who are more than 5 years away from retirement, keep buying, because we have really good stocks on sale today.
Mine's conservative, by the way.
Conservative.
Yes, sir. Yes, sir.
I think we made a couple of changes, a few months back,
yes,
if
we
I'm
did.
not mistaken.
Yes, we
That's
did.
a beautiful thing. So like I said, retirees right now, if you just take a look at your 401k with a little bit more of an optimistic point of view, taking a very specific approach to what funds you sell in retirement income phase can still net a positive even in a down market. So again, the funds that haven't moved at all, those are the funds we should start pulling income from now, leaving those aggressive funds alone to rebound in this coming rebound.
And you'll hear more Saturday morning after the 9 o'clock news with Retirement Matters, Dale Smothers. Dale, good to have you on the Big Dog today.
Always a pleasure, Larry.